Are you getting ready to sell your house and interested on ways that you can save 5 figures in your tax bill? Hi, I'm Julie Merrill. I'm a CPA, and in this video, I am going to share my secret to how you can prepare for your future tax bill and save yourself 4 or 5 figures on that tax bill by doing some little legwork today. Now, this video is for informational purposes only. I am a CPA, but this video and the content I am discussing is no way to be construed as tax or legal advice. Had to get that disclaimer out of the way. Now let's jump into how you can save on your upcoming tax bill when you're planning to sell your house. I have this conversation with clients. I seem to have a lot of clients moving out of California, selling their homes, or thinking about selling their homes. And if they involve me up front, we really get not just a solidified expectation of what the tax impact is going to be, but also what the cash in their pocket is going to be if they sell their primary residence. The first step is understanding how capital gains work on your primary residence. Now, this is different than say if you have a rental property. Today we're talking about your home that you live in. So IRS calls that your primary residence. It's where you live. And there is current IRS code that if you have lived in your home for 2 of the last 5 years and you have owned it for 2 of the last 5 years, you get an exclusion up to $250,000 off your capital gain. It goes onto your cost basis. If you're married and filing jointly and you both have lived in the home the last 2 of the last 5 years and have owned it 2 of the last 5 years, then you can both claim that $250,000 exclusion, and now you get $500,000 off your capital gains. Now, this is kind of a common understanding that most people realize that when we're selling our house, we do have this exclusion. But with today's market prices, and if you've owned your home for a long time, you could very much have a capital gain still pending on your primary home sale. So to understand what your potential tax impact is going to be for selling your home, the first thing we do is look at your cost basis of your home, what you've put into it. Now, you might have a mortgage, and I want you to just kind of put that aside. That goes into a different calculation. If we're looking at cash out, we're impacting our mortgage, but our mortgage doesn't have to do with what we've put into our home as far as our cost. Whenever we sell, like think of a stock, you have proceeds, what you've sold it for, and then your cost, what you paid for it. So when we look at your home, we have a similar calculation. What you've paid for it, plus any home improvements you've put into that property. And then we get this additional possible exclusion if you meet the criteria. Now that is your adjusted cost basis, okay? So now we look at the proceeds from the sale of your house minus any selling costs, right? If you're paying realtors, whatever that percentage is. And then we take into the account your adjusted costs, what you've paid for it, plus improvements, plus this exclusion to get to your new calculation for your capital gain. Why this matters, and why it's so important to be proactive is many times people come to me when they're already packed out of their house, and I'm asking them, what have you put into your house? What improvements have you put into your home? Find those receipts before you pack out your house. Scan them and save them. If you've owned your home for a long time, you might have folders of paper receipts that maybe are for like Home Depot or Lowe's, and the ink is gone. You can no longer read those. So put in some effort, go through your office or your filing cabinet or wherever you have documents that would have receipts. Now, if it's been in the last probably 10 years, you probably have receipts in your email that you can find to support those improvements that you made. What we're looking for is any kind of receipt or contract that you have spent money to improve your home. So we're thinking roof remodels, if we've added on additions, if we've done landscaping upgrades, if we've maybe installed a pergola or done pavers, right? If we have replaced the appliances that we're selling with the property, those are improving the value. We're not including like our monthly landscaping costs, like our gardener. We're not including replacing light bulbs. Now, if we are installing new ceiling fans and light fixtures, those are improving the value. So anything you can find that supports additional money you have spent to improve your home is going to increase your cost basis in your home, which is going to then bring up the amount that we're going to subtract from whatever proceeds you're getting from the sale of your home to calculate your capital gain. So the more support you can find today, save it, scan it, take a copy of it, put it in a folder digitally so that in 5 years, we don't have to worry about the ink disappearing on that Home Depot receipt because we have it scanned and in a folder. The more effort you put in today, before you sell your property, before you file your tax return with that home sale, to find all those receipts. And again, the longer you've owned your home, the more you have to think about. Like, I forgot we did that. We put turf in that section of the yard, or we redid the drains in our backyard so that we didn't have water flowing all over from the pool. Whatever you've done, again, improving the value of your home, spend some time, capture those receipts, save them in a digital folder, whether you use Google Drive, Dropbox, whatever you have, so that they're there to support you. So that when we go to calculate your capital gains and you have to pay capital gains tax, if there is a difference, we can minimize that by supporting more costs and more improvements that you've put into your property. Now, if you're not sure how to scan, there are some great apps out there like Adobe Scan, and even like Google Drive and Dropbox now have ways where you can just add document and the scanner opens up. So your phone is now your tool to digitize these receipts. And definitely, your job is to capture them, find as many as you can, and then work with your tax advisor so that you can truly understand what your tax impact is going to be and your cash in your pocket is going to be after that mortgage is paid off, if there's a mortgage, before you sell your house, so that you're making an informed decision. Now, if you like this video, ring the bell and subscribe to my channel for more videos and tips on how you can grow your wealth and save taxes along the way. I'm Julie Merrill. I'll see you next time.